All right, let's talk about how insurance companies actually price your commercial insurance. Because it's not random and it's not just a number they make up. There's an actual formula out there. My name's Jimmy Goodwin and I'm with TWFG Insurance Services, and over the next minute or so, we're going to talk about how your insurance company prices your commercial policy. And we're going to talk about it in language that you can understand. Carriers look at three things: your exposure, your risk, and your claims history. But more importantly, they look at very specific variables inside your business to calculate the price. First is payroll. Payroll is a major factor if you're talking about workers' compensation or general liability insurance, especially for contractors. The more people you pay and the higher your payroll, the bigger exposure that you have. Next is gross sales or annual revenue. If you're in retailing, food service, wholesaling, or anything that has to do with customers, your sales volume affects what you pay for your insurance. The more sales you have, the more interactions that you have, and the more interactions that you have leads to more opportunities for something to go wrong. Then there's square footage. Carriers use your building size and how much space you occupy to understand how much area that you have and how much foot traffic you're likely to see. If you're talking about building insurance, they're going to look at your building characteristics. They're going to look at when the building was built, how it's built, when the roof was replaced, if it has sprinklers, if it has fire alarms, if the electrical's been updated, if you've got new plumbing. All of these factors go into that. Older buildings cost more to insure. Newer buildings cost less to insure. Location. Location matters too. Location affects your crime score. How close you are to a fire department matters. Your local weather pattern matters. Your wind and hail exposures. All those go into the pricing formula. And the insurance companies can look at all of this based on where your business is. Insurance companies also price your insurance based on your industry classification. A roofing company doesn't have the same exposure as a restaurant does. The insurance companies use something called ISO class codes and NAICS class codes to tell the insurance company how risky your business is. Then there's property values. Obviously, the more expensive your building is, the more it's going to cost to insure it. The more expensive the contents of your building is, the more expensive it is to insure it. Higher replacement costs equals higher premiums. If you have a company vehicle, there's a lot of stuff that goes in there. How far you drive, what kind of driving records that your employees have, what kind of vehicles they have, what your loss history is. All of that is built in there and is going to determine how much you pay for your commercial auto insurance. Finally, your claims history matters. If you have a lot of claims, then that is a red flag for an insurance company. A clean claims record saves you a lot of money. You need to be smart on when and if you file a claim. Things like safety programs, OSHA compliance, driver training, having security systems, those can all help bring down your commercial insurance premium. I know there's a lot to it, but if you need help understanding it, this is what TWFG Insurance Services does every day. And we're happy to take some time and explain it to you to make sure that you get the very best rate possible.